Hi Hick, thanks for joining me again, and for those joining in on this quick update. Hick Chidochi, National Director of Ausbil Investments. Thanks for joining us again.
No problem, Bill. Glad to be with you.
So reflecting on this week on the government stimulus, we've seen a range of targeted measures such as credit guarantees, wage subsidies, tax holidays, and even payments directly to households, and that's been announced in many countries this week especially. So Hick, is the overall financial impact of these measures likely to aid the recovery of households, communities and companies, the share markets?
Yes, well, absolutely. I mean, what's been pleasing, I mean, the market has fallen rapidly, but the response has been rapid too. And what we've seen is a concerted effort by the major global central banks to add what they call liquidity to the system. So it's not just a case of cutting interest rates, which they have done, but it's also a huge range of measures to support financial institutions and their clients. And we've also seen concerted now fiscal measures, which you've referred to, the credit guarantees, wage subsidies, tax holidays. I would imagine we'll see from the banks, hopefully, some loan repayment holidays as well. And so the seriousness of this health emergency, this pandemic, and its impact on economic activity is not being underestimated, which is positive, I believe. And these measures should help. I'd point out one thing. Yesterday, Philip Lowe said at some point the virus will be contained and the Australian economy will recover. But in the interim, a priority for the Reserve Banks is to support jobs, incomes and businesses, so that when the health crisis recedes, the country is well placed to recover strongly. And I believe that's what all the authorities are focused on, which is very helpful for markets. It may not seem that way at the moment because the markets are still very depressed, but in terms of pricing, but it definitely is the right thing to be doing, and they are doing it.
Right. So in a nutshell, governments are very focused on not so much bringing the share market where we'd like to see it tomorrow, but more protecting our way of life and instilling some calm in our communities.
Yeah, absolutely, Bill. And look, this is a major economic shock, but there is light at the end of the tunnel once we see that the health authorities, the medical system is getting on top of the virus, and the economy will recover. But what needs to happen is that the impact of this major shock, unprecedented global shutdown, if you will, and all the social distancing and the lockdowns is going to have a major economic impact. So authorities and the central banks must see us through this period. Interestingly, the CEO of the ANZ said yesterday, there is certainty that this will end. And that's the key, because he was making the analogy with the GFC, where banks were not sure whether the clients would survive in terms of a lot of these vehicles, etc., etc. Now, banks are hopefully going to be much more accommodating this time, because they know, okay, this client can't make the payments now, but once activity returns and confinement is released, and you're seeing evidence of this in China now with what's happening there, these businesses will recover, and that's the key.
Yeah. Okay, well, that's certainly positive in its own nature. So yesterday's RBA historic rate cut down to historic lows, I mean, very interesting. Do you have any specific comments on that?
Basically, what we're seeing is what is needed to be done. And I point out that this is an out of cycle. They didn't wait till their normal first Tuesday of the month. So they are being very proactive. The measures themselves are quite technical, but effectively, if you lend, we lend to you. We are the backstop. We're the lender of last resort. We are there. All the resources are there. They are, and the good thing from our perspective is they're launching exceptional measures. Call it QE, call it what you like. But we haven't had to in Australia. We're actually in a better starting position from that point of view, because we haven't had to do these measures in the past. but they've had the example of what's happened overseas, so they know what works and they are implementing what will work, in our opinion.
Bringing this all back to the sentiment that's in investors' minds, certainly, our clients, most investment funds make money when share markets or financial markets are going up, but they're also at the same time likely to lose money when those markets are falling. And we're talking more about the share market because that seems to be hitting the media. I mean, this can be a worrying thing, particularly for more risk-averse investors. So we're now seeing a classic example of that scenario playing out. I mean, it takes years for a share market to build, and it can just all fall apart short term. How do you guys plan to ride this out for investors within the several investment funds that you run?
It was a bit remiss of me at the start of this conversation not to give what compliance obliges me to give, which is the disclaimer that I'm providing you with information. This isn't advice per se, and all your clients get their advice from you, Bill, and your great team. But what I would say is, first of all, you're quite right. Unfortunately, investment markets, in particular the stock market, they say it goes up the stairs and then down the escalator, and we do see these very unstable periods. This has been incredible in terms of the rapidity of the sell-off. It's unprecedentedly rapid sell-off, even compared to the global financial crisis. And as you rightly say, most of our investments are in long, as we term it, long-only investments. All we do is buy in the main Australian shares. So at times like this, we are going to have a paper fall in the value of our investments. I do stress paper fall because hopefully, as long as you don't sell, you're not crystallizing any of the falls. And yes, it's very unnerving, but you have to ride it out. What we do as managers at times like this in our funds, which are long only, is we raise our cash level because we can do this. And so there's two reasons we do that. It's to cushion a little bit of the fall, but also what we do is we are giving ourselves the ammunition to take advantage, because not every stock in the market is falling the same amount. In fact, there are stocks that have risen in this last week, while some have been absolutely decimated. And if we believe those stocks are going to survive, there is an opportunity for us to take advantage of those ultra low prices. I know you will have clients, Bill, who are saying, this sounds like a great time to invest. And what we would say is, yes, if you're a long-term investor, it absolutely is. The cautionary part of this is we don't know when the market will bottom. And it's very much atypical in that really what we're going to look for is signs that the pandemic, in terms of the rate of infection, is leveling off in the key parts of the world, such as the United States, in Europe, and of course here in Australia. And we're nowhere near that yet because we don't have that visibility. We can look to the example of China, and in particular Wuhan, but we are almost guessing as to the duration of this at this stage, which is why markets are so unstable at this moment. That is the real reason. It's the uncertainty about the duration of all of this.
Once Corona is globally contained, hopefully soon, as China reports it has, how quickly should investors expect markets to normalise?
Well, that's a great question. I don't have the answer per se, but what I would say to you is I think we're going to get volatility to the upside too. So when there's evidence, even tentative evidence, that things are stabilising in terms of infection rates, you'll see markets rally very aggressively. What's likely to happen though is I'd caution against early rallies, because they're going to be rallies and sell-offs, and so it's going to take some time. I'm not sure is the real answer.
Yes.
Normalise is going to take some time because it's such a shock of an event that you don't just go back to normal overnight. But what we are probably likely to have seen is, once there is evidence of the infection rate plateauing and coming off, we'll have seen the lows. That's what will have likely have happened by that stage. But it doesn't mean things were going to go back to being orderly and going up those stairs. There'll still be escalator rides in the meantime.
Yes, because we need to, I guess the world's watching for individual countries and continents to respond differently in that recovery once it does happen. So it'll be interesting times ahead.
Yeah, these are unprecedented times. This is not the GFC. This is a very different type of market crisis, if you will. But as I've said, the good thing from our perspective is we can see the light at the end of the tunnel. We just don't know how long the tunnel is at the moment.
Yeah. Words of wisdom. Thanks, Hick. Talk soon.
Thank you. Thanks, Bill.
Cheers.